Welcome to the Business Finance Matters podcast. Over the next 15 minutes, we're going to tackle some of the topics that we get asked about on a regular basis so you business owners can get a better understanding of what it is that you're probably dealing with on a day-to-day basis. Let's get on with it. Trevor, me old mucker, me old buddy, me old pal, something that we want to talk about today, something that comes into our inbox on a regular basis. And also I see it quite a bit on the various platforms, LinkedIn being one, is fees. When I say fees, this is all part of the cost of finance number, if for want of a better word, that we as intermediaries are keen to make sure that business owners are aware of from the beginning. Because there's nothing worse, I think, than talking to a business owner, may not always be able to give exact confirmation of what the rate might be. It depends. It depends on the lender, it depends on the product. But we are typically able to give some idea what the fees are likely to be, which of course, when you stack that on top of the rates that are being charged, that's all part of the cost of finance.
So let's get to the number of this. Is how would a borrower actually understand all the fees? Let's say if they went direct and not through someone like yourself, who obviously you're an expert in this.
Again, depends which lender you work with.
Right.
I think most lenders are very open and honest about those kind of things.
So these are fees that sit outside the contract, which is the repayment of the money that's been lent, isn't it?
So for example,
they're not rolled in, are they?
Well, no, but they're added to in some cases or deducted from.
Okay.
Again, we're talking lots of different products here, but typically, let's say if it's an asset finance, you probably know just as better than I do on this front, being your background, but an asset finance would typically have a documentation fee, right?
Yeah, agreed.
It will probably have an end of term fee, maybe.
On a high purchase, they would have an option to purchase fee.
If that asset finance term loan is settled early, there would be some other fee process that might be implied. If it's a straightforward loan, then there are typically lender fees. And in some cases, there are legal fees.
Yes.
And I think the point I'm trying to make is, and the point that what people are trying to give us information on, is that businesses need to properly understand the cost of finance. And that includes not just the rate that the finance house is charging, but the cost of it in terms of the fees on top. And that also includes the intermediary fee. So I know it might come as a surprise, but we don't do this for nothing.
Okay, I get you. Cheeky.
So our fees have to be disclosed. So what I'm trying to say is that we would always make sure that when we're putting something to a lender, and certainly when we're talking to a business owner, that we are fully aware of the cost. Because the cost of finance is just as important as the cost of putting the lights on and cost of paying salaries to your staff.
And I think there's a key thing we've got to remember here, is that this is not the time to go 150 miles an hour and get everything sorted as quickly as possible. We've spoken about this before, about speed. You lose all, if you're just focused on getting the deal done as quickly as possible, you're going to miss a lot of this, aren't you? Because it's not effectively often that clear as to all the fees that are being levied by that lender, and they need to be explained. They should be on the document, but they're probably some of them are often hidden in the terms and conditions on the back of the actual front page of the agreement. I mean,
but nonetheless, that as soon as that document is signed, or before even that document is signed for the agreement that we've got in place, they need to understand what the total cost of that finance is going to be.
And let's be frank, these fees are not insignificant in some instances. So I mean, you talk there about a lender fee. Not really too sure what that is. What's that?
And again, depending on which lending option you're choosing, but if we the one I think you're referring to, and the one that comes into us on a regular basis, is that there are some lenders, for example, that will provide, let's say, £100,000 for a business loan, payable over 5 years. There'll be the monthly repayments, which will obviously be made clear. And some people seem to think, well, the interest that they're charging is how they're making their money. And that's not always the case.
No.
So what they do to ensure that they have profit in that transaction, is they will add a lender fee. And that can be as much as 5%.
Oh, wow.
So if you look at a typical...
So 5,000 if you're borrowing 100,000.
5,000. So immediately there's a £5,000 cost that needs to be included in that cost of finance.
And that's a really interesting point.
That's before the intermediaries.
Well, I was going to say that's a really interesting point, isn't it? About the assumption that they're making their margin from the interest that they're charging on that loan. Yeah, they're going to make a margin, but they're going to need to provide for, doubtful debt, bad debt, and all the rest of it, blah, blah, blah. I get the feeling, I mean, I remember many, many years ago when I came into the market, this fees thing, it wasn't that prevalent, but it seems to be everybody's charging a fee for...
What year did you come into the market?
Oh, about 1843 or something.
Back in those days, I don't think the business loan marketplace was relevant at all then.
No, I think you're probably right.
I mean, if I recall, again, it was a long time ago, but if I recall, typically we were looking at bank overdraft.
Yeah.
We were looking, which again have fees. So every bank has their fees.
Yeah.
We were looking at asset finance, of course, invoice finance. The loan market space really only came into its own, I don't know, 2012-ish onwards, 2000, maybe a bit earlier. But I think the loan market is specifically the one that we get a lot of feedback on. Yeah. Is that what the business owner needs to understand is when the rate is approved, so you get your application in, the loan is approved, you'll know what the rate is, but that is, if you want to call us, the net rate. Yes. On top of that, you've got to add the other costs, which are the fees. Costs. So that's the lender fees. Yeah. And it's our fees as well, which our fees are typically added to the loan as well, because the lender will say to us, we're charging 5, that's it, that's not up for discussion. And
of course, you're a good boy, aren't you? You disclose what fee you're being charged.
And we will make sure that fee that we charge is also disclosed to the customer. Yeah. And we have come across a number of situations, as you know, and we've seen it in some of the members that shared this with us, that when you look at those fees carefully, are they really fair? Yes. And that's another topic that comes under this fee. Fees are paid for a reason, and are they fair?
We hear a lot also, don't we, about, what's the APR, or what's the rate, or what's
the yield,
and what's
the that?
Well, yeah, what's do you know what? This is a time, I think, where, if I was in your position, I'd sit down with my potential borrower with a pad, pen, and go through every single fee and work it all out. And I'd take the repayments, I'd find out how many repayments there are, I'd add them all up, and they go, there you go, Mr. Customer, that is what you're in for.
Absolutely.
And I think that is one of the clearest ways of going about it. 100%. Because I'm afraid to say, not everybody does that. Not everybody goes to that length.
And hence the podcast.
Well,
and hence the information that we're getting fed here, that fees are something, I can talk from personal experience where someone approached me. Luckily, it was someone that I knew and said, look, David, we've got this loan approval. How can you have a look at it, please? Sense check it for us, which I did. And one thing that stood out like a sore thumb was the fee that broker was charging. Yeah. And I knew full well that loan application was an auto-accept. Yeah. It's one of the terms that we use in the marketplace, where we put an application up, and subject to its strength and the data that's collated and the size of the loan, we can get these kind of loans approved very, very quickly. Yeah.
I mean,
so how much time that's just taken? An hour?
I was going to say minutes, isn't it? It's not
quite minutes. But
but it's not. It's not 2 weeks.
No, exactly. It's not 5% worth of more fees.
And that also, cross-fertilizing was something else we've talked about in the past, is that, when that business is, shall we say, has failed to plan a little bit, needs cash quickly, it's often not the right way of going about, the fastest out the trap wins, and that's the one I'm going to go for.
Same in life, isn't it? A lot of things that perhaps we go for because we're that impulsive, and then we look back and think, should have perhaps taken my time over that one.
And this is what I always try and stress this when we have these conversations, that you know as well as I do, there's an increasing community of lenders out there that are driven by algorithms, driven by an online presence. Borrowing money, particularly for your business, but also in your personal life, it's not something that should be rushed. It should be very carefully considered. And this is the time when you just take your foot off the accelerator, you settle down, you go through everything. So I'm going to put you on the spot here, Dave. £100,000 loan, all right? 5 years repayments. Let's say, I don't know, off the top of my head, I haven't worked the numbers out myself yet. Let's just put the actual repayment amount to one side for a moment. Typically, what fees would I be expecting to pay in addition to those monthly repayments that I'm expected
Well, as
to
we
make.
said at the beginning of the podcast, depends which product you go for, depends which lender you're working with. But the fees will come in different shapes and sizes, literally.
Yeah.
And the one area that we as members of the guild are always focusing on is the lender will have its fee. That's it. That's not for negotiation.
Yeah.
Very rarely, I don't think I
Take
can
it or leave it, basically.
I can't think of any situation where maybe some of the what do you call it in the asset finance world that do the doc fees or whatever it is.
Yeah.
I think I've managed to negotiate those, but in the main, the fee is a fee. It's our fee, the fee that we will be charging based on best practice, what we think is fair. And I think the challenge that we have, and from what we're hearing, is that there are organisations out there that are putting on top of the lender fee another fee which we could consider is unfair, based on the fact we know how long that process took, and do we think adding another, say, 5% on top of the already 5%, so 10% in total, do we think that's fair?
That's big money, isn't it?
It is big money. And, okay, in some circumstances, I can't think of one at the moment, but when we are involved with some work that's going to take a long, long time, then, there's going to be a fee structure there. So we've got to cover our time.
Yeah.
But typically, again, once we've done our due diligence, we've put it through, we've got the application approved, what is a fair fee? And I think what's happening in the market from what we're hearing is there's a lot of fees going on to these types of products which aren't fair.
Would you say that is it too strong a word to say that people are exploiting that a little bit too much? Are they a little bit too eager, some lenders, to whack on? Let's be honest, whack on fees right, left and centre. I mean, you were talking then about, you knew roughly how much time that would have taken that intermediary to have presented that application. Yeah. Is that fee justified for that amount of work? But lenders also have a role here to play. You just said there that lender fees are very rarely negotiable or negotiated. Yeah. It's a take it or leave it.
You could argue, and this is another conversation for another day, that lenders would also recognise what is a fair fee for the intermediary that they're working with. However, we know that some lenders are so driven by the intermediary marketplace, the last thing that they want to do is tell them how much they can earn.
And the interesting thing then is, it's all right having an interest rate for the interest that's being applied to the repayments, but that's not the end of the story. That is not the true cost of taking that finance product, is it? It's the big message here is, what are the fees? When are they due? How much are they? Write it all down and sometimes, people might go, God, blimey, I didn't realise it was going to cost me that much.
Exactly, the cost of finance.
Yeah.
And what I've done in the past, I know other members have probably done the same, is you'll work out what the monthly repayment is. Yeah. But what you'll also do is let that business know that monthly repayment is inclusive of all the fees. It's unusual that fees are sometimes, and it does happen from time to time, are paid directly by the business. Yeah. So therefore, it's not incorporated within the business finance product that they've taken. Yeah. But most cases, and you can talk from experience as well, would you say that fees from the intermediary's point of view are included within?
They are.
Yeah.
They are. I mean, again, one of our members in the guild's chosen to go a different route, and he's decided that he will take a fee direct from his customer. Yeah. He doesn't want a fee from his lender. Some lenders have gone, great, no worries. Few lenders have said, it's not the way we work. Don't know why, but
But this is my point. I don't know the numbers. If there could be some flexibility for some lenders to say, look, if you don't want to charge a fee, that's fine. Yeah, and you can do that direct. That's fine. I don't see any reason why that can't be a problem.
It strikes me, and I think if you're financing a commodity, an asset, as a one-off, a van or a truck or whatever it may be, I think charging the customer directly, probably not. But if you're financing a project, if you're financing a fit-out or a build or a new studio, for example, it's phased. You're going to need money at different stages of that.
And most business owners don't have an issue with you putting the fee into that particular business finance product.
We got to remember, haven't we, that fee then is, because it's added to the amount borrowed, it will attract interest.
Of course.
So
and that's explained. I have had conversations where I've said you got a choice here.
Yes.
You can either put it in, as part of the financing offering, or if you want, because there is interest, we can agree a fee directly.
So the big message, the big takeaway from this one, I think, Dave, is not just look at the repayment. Don't just look at the interest rate. Look at the true and total cost of that product.
The bottom line, what is the cost? Which, as we know, is not just about the interest rate. It's about the fees too. Hopefully that's clear.
Mate, I think we're getting quite good at this, aren't we? Does anyone listen? Does anybody watch?
So. I don't think anyone cares. But anyway, let's keep chatting away.
Well, indeed.
But we've got a website which we'll keep on talking to the cows come home, and that's bfpguild.org.
Nice.
And then we've got a
And if they want to moan at you via email.
If they want to moan at me, call Trevor.
Thank you. I'll be out. podcast@bfpguild.org, and we are getting traffic through on that. We'll pick up some of those comments.
Thank you for all the feedback we get. Helps.
Dave, good to see you, mate.
And you, thanks for joining us on this podcast. We hope it was useful. Please share, please subscribe so we can share this content to as many business owners as we possibly can. And if there was anything we haven't covered in this particular episode, then please let us know. Drop us a line. We'll be happy to talk about it in future episodes. Thanks again.